Alrighty, welcome back to Daily Day Trades YouTube. If you haven't already, feel free to check out the link below for dailydaytrades.money. It should look a little something like this. And this is where I post all of my trades live, as well as education that you can go through completely for free, obviously, because I would not charge money for education. This page is actually being updated right now by myself, and I'm making it a lot more organized. In terms of pricing, the market makers actually dropped the price 50%, so whoever's holding puts on that, congratulations. This is the lowest it's ever going to go, so I would recommend at least buying calls. You don't necessarily have to join. Something you should join, though, is the subscription button down below. I'm not very good at talking today, but we're working on it. And yeah, that would help out a lot. I don't know how it helps me when people subscribe, but it makes me feel better about myself. So, without further ado, let's get into it. Number one, Warren Buffett, his favorite indicator. Okay, it is the market cap of the entire stock market divided by the total GDP. So, as of right now, that number is 187%. And that's not very good, especially considering that it was only 159% during the dot-com bubble. And we know how the dot-com bubble ended up. Tech got absolutely smashed. Everyone lost a bunch of money unless they just held on to it for years and years until it recovered. So that's definitely not a good number. It's not always going to be, 1-to-1 ratio market cap to GDP. It's probably going to be higher pretty much all the time. But that's just because people speculate the American economy to grow. And as of right now, we're not doing that very well. So we'll get there maybe, but I think we might have gotten a little overextended. I would not be surprised to see some corrections here. You can see it's kind of already hanging on for dear life here. This is SPY S&P 500, but you can see it did that a lot of times though. That's why I'm not that convinced that it's just going to fall off a cliff. And so yeah, you see here looks exact same almost, and then came right back up. Didn't matter here. Completely tanked, right back up, completely tanked, double bottom, right back up for a long time. But something about this one feels different. It's approaching a point where we're about to have that 1.9 trillion in stimulus approved, and people know that it's going to go through because the Democrats own the House, the Senate, and the White House. So I think it's probably just people realizing how overpriced everything is. And the way to play that is to well, either you can buy puts on SPY. That's never a bad idea, and they're not, that crazy volatile or anything. Or you can play something like SPXS. This is a leveraged ETF that's going to follow SPY, but for every 1% SPY goes down, this will go up 3. I should add that this is not a long-term investment. Since it is leveraged, it deteriorates over time. And there are similar ones like this. You can look up leveraged ETFs. SQQQ is the inverse of the NASDAQ, for instance. So here's SQQQ, looks about the same. That's pretty normal, seeing as the indexes pretty much move hand in hand with each other for the majority of the time. Then, on top of all this, we have the 10-year bond yields going up. We already talked about that, so I'm not going to go too far into it, but that does make it a little bit less motivating to go into the stock market, especially when the stock market is valued at 2 times the output of the American economy. Regardless of that, all that happy news, the way I'm going to be playing it is by pretty much avoiding the indexes and playing something more volatile like Tesla. Tesla can go down 10% in a day like it's nothing. And if you have puts on something like that, you're going to make a lot of money. And you can trade them intraday to save yourself a little bit of trouble and scary nights. But like I said, it's not completely on its way down yet. As you can see on the Tesla chart, we're sitting at a pretty normal level. But then there's this 620 point, and if it reaches that, it already bounced off there here, and then back here there was 12 out of 13 days in a row that it hit that price and came back. So if it just zips straight through that, expect a long way down, at least temporarily. I wouldn't be surprised if there was a pretty big jump back up, just because there's such a big buy the dip mentality right now that wouldn't surprise me at all. But Tesla's super overvalued, as is NEO, all of those electric vehicle stocks. As we saw with CCIV, literally just got deleted. So It's not that hard for those to drop a bunch. Obviously, Tesla is not the same as um, Lucid Motors. So either way, that's about all I got. I think I'll probably make another video on this as next week progresses, because this week didn't quite give enough information to really tell us what's going to happen in the coming, quarter per se. So, feel free to subscribe down below, and also check out the education page and the website itself. If you sign up, awesome. Shoot me a DM on the Discord, and we'll talk about what your goals are, stuff like that, and get you going. So thank you.